The Property Bulletin by London Property, the home of superprime.
London, once a property goldmine, is now one of the toughest places in the UK to sell a home. New data shows that 8 of the 10 hardest postcodes to sell are in the capital. After years of booming growth, London's market has slumped. Flat prices haven't risen in a decade, down 25% in real terms. Prime central properties have dropped 42% in value since their 2015 peak. High interest rates, government regulation, high taxes, and post-pandemic shifts have all weakened demand. Buyers are cautious, and many are waiting for mortgage rates to fall. Discounts of 3 to 5% are common, and even cash buyers are holding back, hoping to negotiate. Landlords are also offloading properties due to low rental yields and tighter regulations, adding supply and increasing competition. Experts say London's property market is now firmly a buyer's market, and sellers must be realistic on price to stand a chance. More than 50% of London's 117,000 short-term holiday lets are being rented out for over 90 days per year, breaching current legal limits, according to a new report by Central London Forward, a group of London's borough authorities. Westminster's Labour Council leader Adam Hugg described areas like the West End, Bayswater and Pimlico as being at the epicentre, with issues ranging from noise and fly tipping to rising rents and strained local services. Since 2015, the number of short-term lets has grown from 30,000 to over 100,000, recovering steadily after a drop during the pandemic. Councils say enforcement is nearly impossible without detailed property-level data, as platforms often obscure exact locations. Inevitably, Hugg wants more regulation, calling on the government to introduce a national registration scheme and force platforms to share transparent data. Another Labour politician, London Deputy Mayor for Housing Tom Copley, unsurprisingly backed the report, calling current enforcement powers inadequate. With 65,000 homeless households and temporary accommodation, he urged for properties to be returned to long-term residential use. A government spokesperson agreed with his left-wing colleagues, claiming that the sector has an impact on housing costs and confirming Labour plans to scrap the holiday let tax break and introduce a registration scheme. There are claims that London, Europe's richest city, may be facing a deepening housing crisis. It's claimed that rough sleeping is at an all-time high, with 4,427 people on the streets between January and March 2025, up 8% from 2024. Temporary accommodation now costs councils £4 million a day, with 183,000 people, including 90,000 children, currently housed in this way. Private rentals are shrinking. Thanks largely to government regulation, 45,000 homes have been lost since 2021. Rents rose 11.5% in 2024. New building is needed. London must build 88,000 homes yearly, costing £2.2 billion. High upfront costs, taxes and regulations slow progress. Many Londoners face poor housing conditions, with 1 in 3 reporting damp or mould. So-called experts and campaigners are calling for urgent action and investment. German firm MYNE has brought its co-ownership holiday home model to the UK, allowing 2 to 8 buyers to legally share ownership of a single property, starting from £99,000 per share. The model, already operating in Europe, aims to tackle challenges like rising costs by matching owners with compatible lifestyles to reduce booking clashes. MYNE claims 85% annual usage of its properties and 3 to 6% yearly capital growth, depending on location. Co-founders say it's a smarter, more sustainable alternative to full ownership or timeshare, targeting a new generation of flexible holiday home buyers. Labour's proposed Renters' Rights Bill and plans to abolish Section 21 are being blamed for accelerating the collapse of the private rental sector. Private landlords say they're being pushed out by rising regulation and uncertainty, not greed. In London, 42% of landlords plan to sell up, according to Spare Room, with 88% nationally lacking confidence in the rental market. Landlords argue that Section 21, so-called no-fault evictions, is a legal mechanism to exit the market, not a cause of homelessness. Without it, many are leaving entirely, reducing rental supply and pushing rents higher. Eastbourne Council spent 49 pence of every pound on homelessness last year, yet campaigners say the government continues to vilify landlords, while quietly relying on them to house vulnerable groups. The result? Fewer rental homes, record high rents and a growing housing crisis. Winston Churchill's first London home, a refined Mayfair apartment where he lived from 1900 to 1905, is on the market for $5 million. Located at 105 Mount Street, the two-bedroom, 1,087-square-foot flat sits above the historic Sauter cigar shop in a grand 1888 mansion block. Inside, it blends rich history with modern luxury. Think velvet chairs, silk headboards, crystal chandeliers and Art Deco details. The home offers 9 double-height windows with views of the Connaught Hotel and is just steps from Hyde Park, Bond Street and Michelin-star dining.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.